Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Sifiso Buthelezi. This lesson is brought to you by the Free State Department of Education in collaboration with Pagama Research and Development. Grade 12s, welcome again to today's lesson. My name is Buthelezi F. The topic for today will be budgeting. Our subtopic will be the cash budgets, the projected income statement, and the analysis of the cash budget as well as the projected income statement. Grade 12s, what is it that you must know before the end of the lesson? Let us look at that. You need to know the formats of the cash budget, how to prepare the format of the cash budget. You need to know the format of the projected income statement, how it looks like. We need to know and be able to prepare the debtors collection schedule. You should be able to prepare the creditors payment schedule, or do the payments to creditors, or calculate the collection from the debtors. Remember, debtors collection schedule, we get what out of it? We get the collection from the debtors, meaning we'll be getting a total there. And then from the creditors payment schedule, we get our total, we call it as what? The payment from creditors. Okay, this is what we have now. And then moving on, we need to know how to complete a cash budget, because we are going to be given an incomplete cash budget. We will have to do what? To calculate missing figures. That is what we do in grade 12. In grade 11, you prepare the cash budget from scratch, starting from the receipt up until the last item. But in grade 12, you are given certain figures in your cash budget, and then you have to complete the missing figures. Same thing applies in projected income statement. They will give you certain figures. What you need to do now is to complete the remaining figures. Lastly, this will be the last thing we are going to be focusing on. We are going to be commenting, analyzing, giving recommendations or advices on variances. Remember, what are variances? Variances are differences between the budgeted items and the actual items. So we are going to look at what we planned for compared to what really happened, what we really spent on, or what we really received. Now, let's do a quick revision. Remember last time when we had our lesson, we talked about the items or the amounts that should not be part of our cash budget. Now, grade 12s, what are those amounts or items that must not be recorded in the cash budget? What are the items that are not part of the cash budget? Just a few seconds for you to think about them. Please name it. Tell someone next to you what are the items that do not form part of cash budget. Talk to someone next to you. Some of you are getting it right. Now let us look at those items. We are talking about the bad debts. Why are they not part of the cash budget? Because bad debts is not a cash items. All of them are not a cash item. Right. Discount received as well as discount allowed. Trading stock deficit, which is an expense in your projected income statement. Trading stock surplus, which is an income on your projected income statement. Depreciation, which is an expense in your projected income statement, but it doesn't form part of your cash budget because it is a non-cash item. I hope you are getting that one right. And then profits on sale. Remember, when I sell my asset, at times I would make profit out of that. Now that profit will be non-cash item. So it will be part of my incomes in my projected income statement. Loss on sale, again, same thing will apply. Whenever I'm selling an asset, I'm disposing an asset, sometimes I would make a loss. And then that becomes what? It becomes operating expenses. That is part of our projected income statement. Meaning, from item number 1 up until item number 5, these are some of the items. They are all recorded in the projected income statement, but they are not recorded in the cash budget. Why? Because they are non-cash items. Now remember, one of our objectives, we said we are going to revise or learn how to prepare the formats of what? The cash budget. Here, we have decided to use random figures so that you understand how the calculation works. Right, now our cash budget may have 3 or 4 parts. The first part is the part of cash receipt. On top, it will have the name of the business, cash budget for the month of April to 31 May 2024. That could be an example because the cash budget deals with months. It is per month. It is unlike the normal income statement. Normal income statement is for 12 months, but the projected income statement is for each and every month, meaning we are planning monthly. We are not planning yearly, meaning there will be plans for April, plans for May. These are plans. It's what we are planning for. Under cash receipt, we will have so many items. The first 2 items that should stay like that in the format. It should always start with cash sales if they are there, followed by collection from debtors or receipts from debtors. What is this collection from debtors called? This is your total in debtors collection schedule. Meaning, when we do debtors collection schedule, we are doing debtors collection schedule so that we can record the total under cash collected, cash receipt journal. Okay, cash receipt. Right, now there could be items such as fixed deposit. So this could be fixed deposit that matured. So if the fixed deposit is maturing, then it becomes a receipt to the business. Then it goes to whatever month where it matured. Now, and then also we may have interest on fixed deposit. It's also part of the receipt. Most importantly, if the cash budget is for companies, then we may have items such as the issue of shares. So we may have that. And then after that, now we add all the receipts. After adding all of them, for April, for an example, we got 57,725. For May, we got 154,505. That is just the addition of 36,000 plus 29,505 plus 45,000 plus 4,000 plus 40,000. That gave us a total of 154,505. Below that, we'll have a heading again. What is that heading written? It will be written cash payments. On top of that, we have total receipts. Cash payments, there are always two compulsory items. Every time, if it's there, it should start with the cash purchases, meaning the stock we bought for cash. So this one, stock bought for cash. This is the stock we bought for cash. Now, after that, now we will follow with our total from your creditors payment schedule. That is your total from the creditors payment schedule. Okay? For an example, it was 15,450 in April, 14,800 rands in May. And after that, you may put all the other payments. So it could be the vehicles when we're paying for an installment or buying a vehicle. It could be a repurchase of shares if you're dealing with companies. It could be even dividends. If we pay for interim dividends, it can be part of our cash payments. And then now, what is important? Don't forget, this amount is subtracted. We subtract it, we put it inside the bracket. Those are the payments. Right, now we are looking at the next item now. How do I calculate my cash surplus or cash deficit or shortage? Okay, now for me to get total cash surplus or shortfall, I will take my total receipts minus total payments. Total receipts minus total payments. And then we get our cash surplus or cash deficit. Now, I just want us to look at this now. When does it become a surplus? When does it become a deficit? We say now it is a surplus. When is it a surplus? When your total receipts are bigger than your total payments. So if your total receipts are bigger than your total payment, if on the receipt we have 154,000 for an example, on your payments you have 37,000, then you will get a surplus. So a surplus, we show it by a positive sign or no bracket. Now, when does it become a shortfall or shortage? It is when your total payments now are bigger than your total receipts. So if your total payments are bigger than your total receipts, that becomes what? Total shortfall or cash shortfall or cash shortage or cash deficit. As you can see here, check in April now. April is in bracket. Why is it in bracket? It means this is now a shortfall, a deficit. Why is it a deficit? Because 725,000 was smaller than the total payments of 113. So if I say 57,725 rents minus 113,750, we get a negative answer of 56,025. Now, but for May, things got better. We didn't have a deficit. We had 154,505 minus 37,780, and then we got a surplus. So this is positive now. This is a surplus. Why is it a surplus? Because your total receipt is bigger than your total payments. Then it gave us the cash surplus. Now, we are now coming to the last two items. Last two items on the question paper, they supposed to give you one of the balances, whether the opening balance or the closing balance for any of the months. Okay? Now, I want us to look at that. Let me just clear this. Now, the opening balance, we assume the 18,000. Maybe the question was saying April 1 balance is 18,400. If the transaction is saying like this, and then this balance is on the debit side or is favorable. What does it mean? It means that that amount must now go down and be recorded as what? As our opening balance that is positive. They are going to guide you whether the opening balance of the budget is positive or is it negative. So they can say debit side meaning positive or favorable, debit side meaning positive or favorable, or credit side meaning unfavorable and negative and bank overdraft. Now, we are coming to the closing bank balance. Now, how do we get the closing bank balance now? You just remove this again so that it's going to be clear. Now, I have my 56,000 that is negative, okay? Meaning it's a shortfall. And I have a positive amount. If I say negative 56,000 and 25 plus, because why am I saying plus now? Because the opening balance is positive. So I say plus 18,400. Then my answer, if you punch the calculator the way it is, you will say minus 56,025 plus 18,400. It will give you the sign. So the answer becomes a negative, an overdraft of 37,625. Now, remember what you have learned. Let me just have remove this so that there is no confusion. If your balance carried down, this is your bank account. If your balance carried down, let's say we have a balance carried down here of 37,625. Remember, balance carried down it means what? Your closing. This means closing balance for the bank. Okay? Now, if your balance carried down is on the debit side, it must be moved to the credit side now, and then it's going to be what now? Balance brought down. And then what here does which month will this one have? It will have now May. This one it had what? April 30. Okay? So from the closing balance for the previous month becomes an opening balance for the following month. Meaning the closing balance for November becomes an opening balance for December. Closing balance for September becomes an opening balance for October. So that is how it works. Same thing applies. An opening balance for September is the closing balance for the previous month, which is August. Okay, same thing applies. May opening balance is the closing balance for April. Okay, now we are going to look at the last part. Now, bank closing balance. Now, how do we get it? We had a surplus now of 116,725, and then we are going to subtract 37,625. Why are we subtracting 37,625? Because it was an overdraft coming from April. Now we punch the calculator as it is, then we get a positive answer, meaning a favorable balance of 79,100. Okay? Now that is how we prepare our cash budget in full. Just a quick revision. Now let's look at our projected income statement now. Our projected income statement looks similar to the income statement, except for the fact that it works with months. Everything else is just 100% the same. The only difference is that we divide months. So it has November for an example and December for an example. But it looks like the normal income statement. Sales, cost of sales, sales minus cost of sales, we get our gross profit, plus operating income, we get our gross income. Gross income minus our operating expenses, we get operating profit. We add interest income from operating profit. We get profit before interest expense. We subtract interest expense. We get profit before tax. We subtract income tax. Then we get our final answer to be the net profit for the year. Now it looks at two profits. Profits for December, profits for January, and all of that. Okay? Now, I need us now to look at a question paper. In this question paper, what are we going to be doing? It will test your skill whether you know the difference between the cash budget items and the projected income statement items. What are we looking for here, grade 12s? The cash budget items and the projected income statement items. Now let us look at this information here. As Seagate traders, the information relates to Seagate traders required. Complete the table in the answer book by filling in only the amounts for July in the appropriate columns. They've given us an example here. Commission will be received on promotion items sold 3,300. So we are only doing for the month of what? July. Let's check the heading. It says amount to be recorded in the cash budget for July. On the other hand, it says amount to be recorded in the projected income statement for July. So we are dealing with only 1 month. But there will be amounts that are part of cash budget, also part of projected income statement. Some items are only part of projected income statement, just like the bad debts. Some items are only part of the cash budget, not the projected. Now let us see if we're listening earlier on. So commission that will be received, it is going to be a receipt, so it's part of my cash budget. Also, it is an income for the current month. It belongs to this month. So we record on both. So it affects both. Okay? Now, these are our transactions. We have 1.1.1, 1.1.2, 1.1.3, 1.1.4, 0.5, and 0.6. Okay? I want us to break them down into smaller pieces so that we don't lose focus. I hope grade 12, you are fine here. We are going to be breaking down the transactions. We are going to go together, learn or realize how they are supposed to be recorded. Now, let us look at the first two items. This one, it says expected. It's money I'm expecting. Cash sales will amount to 49,500. Cost of sales of it will amount to 23,300. Now, we are talking about cash sales. Do we have cash sales in our cash budget? Let us think of our format that we learned. The answer will be yes, we do have. So meaning the amount of 49,500 will be part of what? Of our receipt. Why receipt? Because we are going to receive an income. We are going to receive cash sales. That's why it's under receipt, not payments. We are not paying for cash sales. We are receiving cash sales. But what about cash budget? What about, do we have something called sales in the cash budget? Yes, the answer is yes, we do have. Now, remember, for our projected income statement, it says sales minus cost of sales, and then this gives us what? Gross profit. Which one is an income here? Which will be sales. So we'll have sales to be 49,500. And then cost of sales becomes our expense. So it is going to be 23,300. Okay? Or we can do it in another way by finding the gross profit. Meaning we just look at the difference between the two. Let us just do that. Let's take our calculators. How do I get the gross profit in 1.1.1? Yes, we say 49,500 minus 23,300. Then our answer becomes 26,000. So here it's 49,500. We just show it here on the format, 49,500 minus 23,300. Then this gives us 26,200. So 26,200 can be recorded under incomes in the projected, because gross profit is what I am receiving. Okay, so you can either have 26,200 in your incomes and nothing in your expenses, ne? Or nothing in your expenses. Option 1, I can record cash sales of 49,500 and record the cost of sales under expense of 23,300. Or I can record the gross profit under incomes and then I don't record anything under my expenses, because 26 is the combination of sales minus cost of sales. I hope everyone is happy with number 1. 1.1.2. Payments to creditors 19,800 are expected to be made, and then the discount of 990 will be claimed. Now let us look at this one. How do we go about doing this one? So with this one now, we are going to be looking at payments to creditors. Where do we record? Where did you see, according to the format, where did you see payment to creditors? We saw them under the payments in your cash budget, meaning this amount of 19,800 goes to the payment side. Okay? Because it is under payment side as per the format of the cash budget. But it's payment to creditors there in the format of the projected income statement. No, it is not there. It doesn't exist. So it won't be part. But we have discount that will be claimed. Is discount there in your cash budget? Is discount there in your cash budget? The answer is no, it is not there. So meaning we are now going to record it under your this will be your discount that you are going to receive as the business. So this is your income. So it will come under incomes 990. Okay, that is the discount we are going to be claiming. I hope everyone is fine. Remember, here we had 49,500. Here we had 49,500. Here we had 23,300. Okay, or there was something like 26,200 here. Let's double check it again. Minus 23,300. Yes, 26,200. Okay, and then there was nothing here. Now let us look at the other part. Now we are looking at the number 3 and 4. Bad debts to be written off will amount to 1,320. Now, are bad debts part of the cash budget? The answer is no, because we learned that earlier on today's lesson and last week's lesson. There is no bad debt under cash budget, so we are not going to record anything under cash budget, but it will go under projected income statement. Now, what are bad debts? Are they incomes or are they expenses? The answer would be they are expenses. Meaning we are going to record the amount under the expenses. Now, grade 12s, I hope you are digesting the whole thing now to see how these items are calculated. Now, next one, 1.1.4. This one talks about what now? Depreciation for the entire year, meaning this is depreciation for the whole year. Now, I'm asking a question again. Is your depreciation part of your cash budget? The answer would be no. So we don't record anything under cash budget. But depreciation is part of what? Your projected income statement. Now, in your projected income statement now, is it going to be an income or is it going to be an expense? Yes, the answer would be depreciation is an expense. So now, but the problem, we need to work it out because now we want the depreciation for 1 month. So we say 36,960 divided by 12. 36,960 divided by 12. And then we get an answer to be 3,080. This is an amount per month. Now we are going to record it. We already said it's an expense, so it's going to be 3,080, which would be our expense. Now let us move on. We are now doing the last two now. This will be the end of our first activity. Directors' fees to be paid, 55,000. So that is what must be paid in July. Now, directors' fees will be a payment, will also be an expense. So I'm paying for directors' fees. Directors' fees is not an income for the company, but directors' fees is an expense for the company. So we will record only twice. Remember, you can't record everywhere, because if you're recording 4 times, then we deduct marks for doing so. Last one, interim dividends to be paid to shareholders. Now we have our interim dividends. Now I'm paying, so it is part of my cash budget because it's a payment. But under the projected income statement, what do? Is it an income? No, it's a payment. So we are not going to record. Remember, dividends are not part of the income. They are not part of the income statement. Now, this is our full solution of what you have already done. In case you missed some, this is what we have already done. There we have it. Take a minute to look at this. Okay, right. Now we are moving on to our next activity. Now this activity is now extracted from Mpumalanga Prelim Paper 2019. This one will check if we still remember how to calculate debtors collection schedule. Remember, we need our debtors collection schedule for our total receipt in our cash budget. Remember, the answer should be recorded under the cash from debtors. Now, let us look at the information given to us. We are provided with information relating to Astro sporting equipment. Required, complete the debtors collection schedule for August and September. Very important, 75% of all sales are on credit, the rest is cash. Debtors are expected to pay as follows. 25% they pay in the very same month, meaning if I sell in January, I am going to collect money starting from January. If I sell in February, I collect in February. That will be my first collection. But I'm not going to collect everything. If the person is owing me 10 rands, I will only collect 2 rand 50. That is 25%. Second month, I'll collect 40% of the amount. Third month, I collect 30% and then 5% will be written off. Now we are given the cash budget. What are we going to do here? We are going to do what is in our question marks. We are going to do what is in our question marks. Now, let us do the activity together now. We are going to be looking at this, where there are question mark. Remember the first question mark was on the August. Now, let us look at this. These are months that we sold. Well, we sold in these months. When did we start selling? We started selling in June. Now, let us do the payment pattern now, the collection pattern now. What are we going to be doing when we sell in June? First thing we need to know, what are our focus months? Our forecast as well as our focus months are the months of August and September. Meaning anything affecting August and September will be calculated and recorded. Already, we are fortunate because they've calculated credit sales for us. We have our credit sales. If we have our credit sales, then we can start working. Remember, our debtors collection works with credit sales. It doesn't work with total sales. It doesn't work with cash sales. Now, let us start collecting for June. When we are in June, we will start collecting the 25% in the very same month. Is June part of our forecast? The answer would be no, we skip. After collecting 25%, we will collect 40%. What is the month after June? After June, we have what? July. Is July part of our forecast? You see the question I'm always asking myself, is it part of my written months in my table of the debtors collection schedule? The answer would be no. 40% is not part of our forecast months, because after collecting in June, 25% we collect in July. After collecting in July, what is the month after July? That will be August. How do I do this now? We take 61,000 multiplied by 30 over 100. And then let us see how much we get. Let us calculate together. 61,000, which is our credit sales, multiplied by 30%. Our answer becomes 18,300. This is the money that will be collected in July for the sales of June. So we have 18,300. After collecting 30% now, what must we do? We need to write off. What are we writing off? 5%. We are writing off the June bad debts in a month of September. So we are not going to continue because we don't record bad debts in the cash budget. We're moving to July now. July already, when we start collecting, we start in July, which would be 25%. We don't have July. We collect 40%. How did they get the 26,000? They've said 66,000 multiplied by 40%. So to get this amount, they've said 66,000 multiplied by 40 over 100. Then they got 26,400. Now, we're moving on. That is already recorded. After collecting 40%, we collect what? Remember, it is 25% collection, 40% collection, 30%. As long as the months are part of our forecast months. Okay? After collecting 40, we collect what? 30. So now, we use the very same 66,000 multiplied by 30 over 1,000 multiplied by 30 over 100. Then we get an answer to be 19,800. Okay? So it becomes 19,800. That is 66,000 multiplied by 30 over 100. 19,800. After collecting 30, we can't record the bad debts. Not part of our main columns that we have. Now, August. August is very interesting because we are not given the credit sales, but we're given the amount that is collected in the month of August. So it will be easy. Now, let us remember, August, when I sell in August, I start collecting in August. Meaning the 15,750 is the collection for August. What are we starting to collect with? 25%. And then what would be your credit sales in this case? It would be 100% of the 25%. Okay? Now, first thing I need to do here, we need to do what? We need to calculate the credit sales for August. Okay? How do I do that? First of all, I need to write down some information, some guidance. I would say now, 15,750 is the same as 25%. That is the collection. Why am I saying it's the same as 25%? Because the 15,000 recorded there is the first collection for the month of August. That's why it's recorded in the column of August, because that is the month of sale and the month of collection at the same time. Now, we are moving on. After collecting 25%, we now we are now going to look at what would be our credit sales. Our credit sales should be 100%. Remember, these customers will be owing us 100% of the amount, and then we collect it in portions: 25%, 40%, 30%. Now, let us use the formula of amount given multiplied by unknown over known. Now, how much is the amount given here? We are given 17,500 multiplied by, I am now looking for the credit sales. So it's going to be 100 over 25. Let us do that. 15,750 multiplied by 100 over 25. The answer becomes 63,000. Why 100 over 25? Because 100 is the credit sales. We've already mentioned that. I'm looking for that. What I'm looking for is on top, what I have below. So this becomes 63,000 rands. I can now continue with my collection because I now have my credit sales. I'm going back. Remember what we said earlier on? We said 15,750 is the collection for August. After collecting 25%, what must we collect? We need to collect the 40%. Now, how do I do that? We're now going to say 63,000 multiplied by 40%. This will give us an amount of how much? Let us do it. 25,200. It will be 25,200. Okay, and then we come to September now. For our September, it is the month of sale. We start collecting in September. Fortunately, we do have September in our collection forecast months. So it means, what are we starting with? We start with 25%. We start with 25%. So it means we are going to say 70,500 multiplied by 25%. And then what do we get now? Let us calculate together, grade 12. 70,500 multiplied by 25%. That would be 17,625. So we record in the correct column, remember. Now, let us do our totals now. For August, it will be 18,300 plus 26,400 plus 15,750. Then we get 60,450. Grade 12, don't worry, I'll show the full solution after this. Then 19,800 plus 25,200. Start again, 19,800 plus 25,200. Eh? Let us calculate together. Plus 25,200 plus 17,625. Then we get 62,625. This is our calculations. Meaning in August, we collected 60,450. In September, we collected 62,625. Now, this is our full solution now. This is the amount that we just calculated now. 18,300. We also calculated 19,800. We calculated 25,000. Calculated 63,000. We calculated 17,000. Okay, this is our full debtors collection schedule. Okay, now let us move on. How do we calculate bad debts now? Let us look at the bad debts calculation. It says here, determine the amount of bad debt written off that will appear in the projected income statement. We are now on the projected income statement. We are trying to do the missing figures in the projected income statement. Now, remember, how do we determine the bad debt? They say we are calculating bad debts for what? for September. Ne? The ones that must be written off in September. Meaning, how long does it take us to record bad debt? It must be month number 1, month number 2, month number 3, and then bad debts must happen in the 4th month. Meaning, let's start with the June. Month number 1, June, it will be June. Month number 2 will be July, that is 40%. Month number 3 will be August, that is 30%. Month number 4 will be what? September. So therefore, it is 61,000 multiplied by 5/100. Then we get 3,050. Let us look at this. That will be 3,050. Okay? Or let us look at, let's say for an example, they gave us 18,000. Remember, this is 61,000 rands. If they give you the collection for August, what are you supposed to do? Remember, collection for August is the 30% that we calculated earlier on. So we say what? 18,000 times by, remember we look for these credit sales. How do I get these credit sales? 18,300 multiplied by 100 all over 30. Because 100 is credit sales, 30 is collection for August. Okay? And then times 5%. That is how we can also do this. Now, we are looking at activity number 2 now. Calculate A to C as provided in the budget. Use budget figures. Very important, they are guiding us. We are using budget figures in our calculation. We have 3 transactions that we are going to look at. We are going to break them down into pieces. First transaction talks about purchases. Second one talks about salaries of sales assistants. Third one talks about loans. Now let us look at this. This is the information. So we are looking for A and B, which is payment to creditors, as well as C. Now let us look for A now. We are looking for this amount of loan for the budget. What is the transaction given us? They are saying a loan will be taken from BB Bank at an interest of 18% per annum. Now, how do we do this? Now we take the money for interest on loan, multiply by, when you are looking for loan is the same as the 100% of the amount because the interest is only taking 18% out of the 100%. Meaning this is 18%, this is 100% as stated. Okay, so I am looking for loan percentage over interest percentage multiplied by total months over 1 month. Why 1 month? Because the 2,000 is for 1 month. Okay? Then the answer becomes 192,000. Meaning 192,000 is our loan BB. So we have our answer here, 192,000. I hope grade 12 you are fine. Let us move on to the second one. We are now doing B. It says purchases of merchandise and payments to creditors. 50% of all merchandise is on credit, only 50%. How do we pay in our creditors? Our creditors are paid 1 month after, and it is subjected to 4% discount. What does it say now? It says that if I buy in January, I am going to pay my creditors in February. And then what does the subject to 4% mean? It means I am not going to be paying 100% of the amount. I'll pay 100% minus 4. So I am going to be paying 96%. Meaning I'll have to multiply by 96%, not hundreds over 100. Now, here's our calculation now. We can use our cash sales because what we have here is our cash sales. First of all, we have to convert the cash sales into what? Into cost of sales. Okay, let me just clear this so that it's going to be clear here. This is the first part. Why are we doing this calculation now? We are doing what? Converting into cost of sales. Sorry, pardon me, not cost of sales, but we are converting. When we do this, we are converting into total sales. Okay? Now, why am I saying so? Because cash sales, because our cash sales is, we are told that our cash sales would be 25%. If you remember, that was discussed at an earlier stage, meaning credit sales are 75%. Therefore, our total sales will be 100%. That is why we're saying 100 over 25, because we are looking for total sales, which is 100. We are given cash sales, which is 25. And then second part, 100 over 160. We were told at an earlier stage that our markup is 60%. So remember, our cost price is always 100%. Our markup, we're told, it is 60%. And then now, our selling price is going to be 100 plus 60. That is why we're saying 100 all over 160. Okay? Then when we do this, we are converting into cost of sales. Now, when we say times 50 over 100, what are we trying to do? We want to get credit purchases. Remember, we're told that 50% is our credit purchases. Now, what is 96%? 96% now, it is our discount. We are recognizing discount. Remember, this is 100 minus 4%. That gives us 96. Okay? Then when we do our whole calculation, it gives us 25,200. So meaning B is 25,200. Then we're moving on. We are now looking at the cash budget, salary of sales assistants. Here we have the budgeted as well as the actual amount for the sales assistant for August. And then we are looking for the sales assistant for September. Now let's look at our information here. The business employs 4 of them. There are 4 on the same salary scale. They will all receive an inflationary rate of 7.5. Meaning on their amount will be 7.5 more than before. Effective from when? From September. But now there will be 1 additional. Now they will turn to 5. Which will be employed? Who will be employed on the 1st of September? But she won't receive the salaries the increase for obvious reasons. The worker is still new. Right, now let us see how this is done. We can take the sales and check how much are they going to receive. The 4. This is for the 4 assistants. So it's 22,360. How did we get that? Remember, it is 107,000. Remember, that is 100 plus 7,5. That is 107,5. Okay? Meaning, that is the first portion of the amount you're going to put there. We'll combine all of them later on. Additional one. Remember, we can use the salary of the other four to know how much were they earning per month. From what they're earning per month, that will be the new salary of the person. So now, additional assistant is earning 5,200. That was 20,000 divided by 4. Why divide by 4? Because there were 4. The amount here consists of 4 employees. Okay? Now, our answer now will be 22,000, which we calculated earlier, plus 5,200. Then we get 27,560. That is our answer for C. Now, let us look at our rent income. Rent income, what are we required to do here? We are required to calculate the rent income percentage. We want to calculate the percentage increase. How do I calculate the percentage increase now? We need to find the difference first. Rent was 8,000, it is now 8,600. So what is the difference here? The difference will be 600 rands. Now we say 600 divided by 8,000 times by 100 over 1. And then we get 7,5%. That would be our increase. Now, let us see if you were given 8,600 and the 7,5. How are you going to get the 8,000? Easy. You were going to say 8,600 multiplied by 100 because 8,000 consists of 100% of the amount. 8.6 consists of 107,5% because it's inclusive. Now, how do we do that? Let us prove the calculation. 8,600 multiplied by 100 over 107,5. Then we get 8,000. Please learn how to work backwards. Don't just work forward, also work backwards. Now, let us look at the variance analysis now. This is the paper extracted from Northwest prelim paper. Now, we are looking at now how to comment. We are checking if we know the skill of commenting. Remember, we touched on this last time. This is our activity 3. Now, the first question, it says, comment and give one advice on the control of the following. The first one looks at what? Advertising. I want us to talk about advertising. What is happening with advertising? Let us study it together. It is the budgeted, meaning budgeted is the plan. This is the wish. It's what you are wishing for. It's what you are planning for, hoping to achieve. But the actual means what? The reality, meaning this is what you have actually spent. Now, we were planning to spend 12,000 rands on advertising, but we ended up spending how much? 5,000. What are we saying? Let us write what we are saying now. We budgeted to spend 12,000 rands, but only spent 5,000. So here we are saying we spent less. You see what I'm saying? I'm not saying it decreased. It did not decrease. But we just did what? Spent less. Okay? We don't use the word decrease, increase, and whatsoever. We use the word overspent, underspent. We have talked about this in our previous lesson. We spent less. Now, let us look at the impact of this. Remember, advertising goes together with what? Sales. We advertise because we want to have more sales. So now, sales budgeted were 80,000, but only received 72,000. So this is less. Okay? Meaning there was poor control over advertising. Why am I saying there was poor control over advertising? Because advertising is supposed to increase sales. If it's not increasing sales, then there is poor control. Okay? Others would want to work it using the percentages to show its ineffectiveness. It's also fine. 12,000 over the amount of sales, 80,000 times 100. Okay? Right. Now, the decision we have taken has negatively affected sales. Our sales are low because we advertised less. Now let us look at this before we move on to the next one. Please allow me to erase so that I can get enough space to write the second. I am going to remove this now. Let us look at the next one. Now we want to comment on packing material. Now, what are we going to do with packing material? Remember, what is packing material now? If I'm selling this sanitizer, this container is my packing material. Meaning, if I sell more sanitizers, I use more containers. More containers becomes my what? My packing material. Okay? Meaning, as sales increase, my packing material must do what? Increase. But if my sales are going down, my packing material must do what? Go down. Now, let us see here. We are saying we budgeted 4,000, but only spent how much? 7,000. So we spent more. So I am saying we spent more. We budgeted 4,000, but spent 7,200, while sales budgeted, there is 80,000, are less than actual sales received, 72,000. So our sales budgeted are less than actual. Remember, we are saying that packing material must increase proportional to the sales. We can also do percentages and say, how do I do my percentages? I can say packing material divided by sales times 100 to see how much percentage am I spending for packing material on sales. Now we can say 4,000 divide by 80,000 times 100 over 1. This is for the budgeted. Let's see how much we get. Okay, let's go backwards a little bit. Okay, 4,000 divide by 80,000 times 100. This is 5%. Meaning the business was planning to spend only 5%. Okay? Now let's see how much we spent. 7,200. 7,200 divided by 72,000. That is 10%. So what are we saying now? We are going to say on material we spent 5% more on packing material. You can also calculate it like this. Remember, packing material is also having a relationship with sales. Just like advertising has the relationship with sales. I've already explained that. Now let us look at that. We said packing material we spent more, budgeted to spend 7,000, budgeted to spend 4,000, but spent 7,200, while sales are 8,000 less than the actual of 72,000. 80,000 less than the actual of 72,000. Or I can work it out using the percentage, packing material divided by sales times 100 over 1. So meaning I decided to packing material is 4,000 over 80,000, I get 5%. That is what I budgeted to spend on packing material. Right? But I ended up spending 7,200 over 72,000, that is 10%. So we spent 5% more. Okay? So percentages, remember, percentages will tell you the real story whether there was an increase, whether there was a big variance or not in your items. Now, let us look at another activity now. Here, we need to calculate the markup percentage on the spare part used in the projected income statement. After that, calculate the percentage decrease in service income. So here, we are provided with information relating to Portville Auto Repairs for the period of 1 March 2018 to 30 April 2018. The business is owned by Amornel. First question, we calculate the markup. Second question, we calculate the percentage decrease. Okay? Now, how to calculate the percentage markup? Now, remember, our formula says gross profit over cost of sales times 100 over 1. Okay? Now, let us look at that. How do we calculate that? We are going to take our cost of gross profit. Our gross profit is here, 34,312, divide by our cost of sales. Our cost of sales is 45,750 times 100 over 1. Why are we doing all of this? We are learning to do the items in the projected income statement. We are learning to calculate items in the projected income statement so that we can complete our projected income statement. 34,312 divided by 45,750. So our answer becomes 74,998, which becomes 75%. Okay? To round it off. And then now the other one said we must calculate the percentage decrease in the service fee income. Here's our service fee income. How do we calculate? Remember, it's moving from 225 to 204. So we must get the percentage decrease. We've already done this. So let us look at that again. We take now our 225,000 minus 204,750 divide by where the amount is coming from. times 100. Okay, let us do this. 225,000 minus 204,750 divide by 225,000. So our percentage here becomes 9%. Remember, you divide by the initial amount. So our percentage decrease becomes 9%. Okay, remember, you must put the difference on top, divide by the initial month. Okay, now the second one, it asks us to look for the interest on a fixed deposit. Now, for the interest on fixed deposit now, we are looking for the interest rate, meaning we are looking for the percentage. Ne? Now, we are given the interest on fixed deposit, and we are told that the fixed deposit of 675 will mature. Now, what is the first thing we're doing? We get the difference between the two interests. Remember, if you can check here, interest for March is 8,550, but for April, it's going down. It is 4,050. Why is it going down now? Because the sum of the fixed deposit is no longer there. It matured. Okay? Now, how do we do that? Now we say 8,550 minus 4,050, we get 4,500. And then on this amount, we can multiply it by 12. And then we divide by what we have, which is 685. Okay? Because 4,500 is the interest for 685, the one that matured. The interest that went away is the difference in the amount that matured. So 4,500 multiplied by 12, divide by 675,000 times by 100 over 1. Then it gives us 8%. Okay? Now we're moving on. We are now calculating the additional space in square meters. Now, there is our question. We are calculating additional space in square meters their business will rent from April. What are we given now? We are given rent expense. Let us get the background on what they are saying here. Rent expense is calculated on a fixed square meter. The business will rent 75 square meters in March. On April 1, 2018, additional floor space will be rented at the same rate due to expansion. Okay, as you can see, if we rent more, our rent increased. Now, let us see. Remember, we used to see this question under the cost accounting, manufacturing. First of all, we can take the 9,000, we divide by 75, so that we can get how much are we spending in each square meter. Okay, we're getting 120. And then from there, we can get the difference. If we have 120, we are done. Then now we can get the difference, because the difference means additional. Additional is just the difference. Now let us see how much is that difference. 13,800 minus 9,000. 4,800. Meaning this 4,800 is the additional rent. How much am I paying rent per square meter? I'm paying 120, meaning it's 120 per square meter. Now, I'm going to check now how many square meters am I going to occupy or need. Now we say 4,800 divided by 120, and it becomes 40 square meters. There are so many ways of doing this. Let us look at this one now. It says calculate the cost of new vehicle that she plans to purchase on 1 April 2018. Now, this is the depreciation. So we have two depreciations here. Remember, if your depreciation is going up, it means that you may have bought additional assets. If it's going down, it may mean that you may have disposed your assets. Now, let's just look at the additional information. A new vehicle will be purchased on 1 April. Depreciation on vehicles is 15% per annum on cost. Okay? Now, let us see how this is done now. We can again get the difference, just like we did with the interest rate that side for deposit. We can say 4,500 minus 13,500. Remember, the 19,000 is 4,500 minus 13,500, then we get the 9,000, okay? And then that is per month. Remember, for you to get for all the months, then we say times by 12. Then we get 108,000. So this is 108,000. And then now we can divide by 0.5, 0.15, or divide by 15%. Then our answer becomes 720,000. That is our cost of our new vehicle. These are very interesting calculations, grade 12. After this, please do look at them again. Right, and then now we are looking at this. This will be an activity where you are going to be looking at your analysis. I am going to give you this activity as part of your homework. Here, we need to explain whether water and electricity has been well controlled or not. Also, explain whether the decision not to use the full budget for advertising was a good decision or a bad decision. And then comment on the consumables to say whether they're well controlled or not well controlled. So these are the figures given to us for the projected or the budgeted as well as the actual. Now, this is the information. Explain whether the water and electricity has been well explained, has been well controlled. This is what we are going to be doing. And then number 2, this will be your second activity, projected income statement. Explain whether you agree with Amora's decision not to use the full budget for advertising. There we have it. You have all the figures you need there. You have to explain. Explain whether consumable stores have been well controlled or not. There we have our consumable stores. That is your homework again. Right, so you have 3 activities that you need to do as homework. When we meet again, we are going to start by marking those activities and then we do the lesson of that particular day. Grade 12s, thank you for watching this lesson. Goodbye.